This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So we're going to talk about how to use a trading strategy to really improve your trading. All right. This is the goal. I do this in my book. I go through this specific strategy that I'm going to show you today, the stock that just did this recently. All right, we have actually had a significant amount of stocks that have played off their weeklies using the daily risk, and just great examples of my approach to the market. So I want to get into this, but I want to explain this one thing. The goal of a strategy like I'm going to show you is it teaches you how to trade in multiple time frames, and by doing so, it also gives you the ability to have a plan to look at, to go through, to follow, and make sure that you're trading properly for 20 to 25 trades. If you can't trade and follow a plan for 25 trades, you need to go back and start over again and do another set of 25. And you keep doing that until you can get yourself to follow your plan. If you can't follow your plan, then you're really going to struggle. And the biggest problem with it is you don't know even if the trading strategy works because you're not following it. All right, let's go ahead and get into this. Now, if you do want to learn more about the strategy, the specific strategy I'm going to talk about today, the 2 time frame pinch play, you can start with my book and click the link in the description to find out more. Also, if you do enjoy this content, please hit the like button and also subscribe. Okay, I've got an energy stock here, CVR Energy. CVI is the symbol. I've got a weekly chart on the right and a daily chart on the left. We always start with the higher time frame. Okay, you want to make sure you are looking at the higher time frame to start. That is how I teach it, and you want to make sure that you're playing. So the reason why I say this is that when I started out trading and I started learning this 2 time frame pattern, I started to get really good at seeing the smaller time frame developing, and it would look so good that I would kind of look at that before I was looking at the higher time frame, and it got me in a lot of trouble. I ended up putting on a lot of trades I shouldn't be taking because I'm looking at the small time frame instead of looking at the higher time frame. Always start with the higher time frame. Now, the beauty of this move here, you can see we made this strong move. We turned the 18 to the upside, and this is the first test. But look at the way it played out. Red bar, red bar, red bar. We had 3 consecutive candles take place, and then a green shows up. All right, you can notice that the MACD line is holding its signal line. You also see that we have good ADX condition in place. So all of this is sort of playing in our favor on the higher time frame. But you don't need, so to do the 2 time frame pinch play, you really don't need this necessarily. Okay, and you don't need 3 red bars. It's nice to have lower highs in place. But you got the 3, and you had the little fake bar here, a little kick bar to the upside. But I think that, I mean, if you were going by letter of the law, you would say this is not a pinch. Well, you would say that this was the pinch up here, right? And that was the entry, and that's really on this move here. And on the smaller time frame, which we know is no signal. There's absolutely no signal yet, right? So, I mean, yeah, if you were going by letter of law, you'd say, well, there was no pinch play. But I don't look at it that way. I mean, this is a clear pinch into the signal line. This is really what we're looking for right here, where the MACD is moving up and there's separation, and then it reduces that separation by pulling back towards the signal line, which is rising. All right, so that's really what I'm trying to find. And if it stays above, then it's almost acting as a slingshot where it's holding above that, and it's acting like some type of a support level that's going to push it to the upside. All right, and if I don't have ADX, I'm only looking for a 2 to 4 bar move. All right, I mean, I'm not looking for some monster. So it would be like, 1 bar, 2 bar, and then this big green bar coming back up towards this high. I might consider like that. Okay, that was a good trade. Now remember, that's on the higher time frame. The lower time frame, you're talking about getting in here and making a move all the way back up to this prior peak. So that's a pretty good play if you look at the risk reward on it. All right, now, so again, we start with that higher time frame. We're looking for the pinch. we get that, we have good momentum in place, and then we go to the smaller time frame. Now, on the smaller time frame, the 18 is going to be falling. When this is dropping and the 4 is dropping, then the 18 is going to be dropping. All right. So we need to get a match here. We need to get a match where the 18 is holding on this time frame too. So it's holding on this time frame. And let me just erase everything. So the pullback is holding on this time frame. Now we need a match on this time frame. We need the 18 holding on this time frame. Now we get that. It's a little awkward in the way it plays out. Now for anyone who watched my Tuesday video, you know that the way this played out was different. It didn't come in the zone between the 18 and the 40 and come out. It just went straight up and closed above the 40. All right, so we have to have a different strategy for this. We wait for the first setup, the first pullback, and what I like to do is make sure that it is holding that 18, the 18 starting to cup around. But what this did was it actually did form a little pocket pinch play where we had an inside bar form the first lower high, and then we had a tiny little narrow range bar form the second one. So if you bought my second course, which is the compression-based swing trading, this is actually a pretty good example of what I'm looking for. You get everything that we look for on the main time frame, but we have this pinch in place, and we know that we can play for 2 to 3 times our risk and look for an explosive move because we have compression in place. All right. So, but the key thing to keep in mind is to start with the higher time frame holding the 18. All right, and then while it's holding the 18, you see the 4 pulling back. Well, we're going to have the 4 be about the same as what's going on with the 18. Once that's holding, and we know that's starting to curl around, now we have a match between the 18s. That's the goal of this, is to understand. That's why if you trade and you were to buy here, by taking out the high of that bar, which is the rules of the 2 time frame pinch, then in this situation, you are playing like a professional. It's teaching you how to trade because you're waiting for confluence amongst the 2 time frames. You get one time frame turning up and then you wait for the second one. If you can do that and you have the patience to do that, then you're really in a strong position. Now, what I say in the book is that you put a stop in this case, you'd actually put the stop in down here, and then you'd look for 2, I think I say 2, I give different examples, sometimes 2 times your risk and sometimes 3. When the risk is this big like that, I would say just go for 2. But there's another way to do it. You could use average true range, and I talk about that in my courses. It is a preferred method. You find out the average true range, multiply that times 2, and that's basically the stop method you're using, and it should be somewhere in the area of the bottom, right? I mean, there should be some overlap there. Now, when you use that, it's using the stock's own volatility to help you determine where to place the stop, right? So, and it's also using the stock's own volatility to determine when to take targets. It's I think, a much better way to do it. But if you follow the plan that I talk about, it's going to make you a better trader. The fact of the matter is you can go through 25 trades, right, and lose in 15 of them, okay? But if you followed the plan and you did the 2 time frame pinch play and you followed everything and you had 15 losers out of 25, well, I mean, that's just a small sample size, right? And the question becomes, were you able to follow that? Because it's going to make you a better trader. You're going to start to see things better. And then the next time around, you might, in this case, I think it would be almost impossible if you took this trade and not had a winner. But there are times where you'll come across a pinch play that, where it gives a false signal and then immediately just gives it up, all right? And if that's the case, you just kind of have to accept that and move on. Again, that's the whole reason for using the 25 trades, going through 25, learning how to trade in multiple time frames, making sure you're getting confluence amongst the 18s, all right? And you're looking for pinch play and pinch play, all right? I know this doesn't fit the perfect category of a pinch, but I mean, it really doesn't get much better than that. And then you had the pinch here. Now, the one other thing I'll tell you is that what's nice about this is that if you notice you had your ABC down and you had a lot of overrun in the MACD here. What I teach is, and if you notice, you didn't get the sellers to do anything. The sellers weren't able to get the ADX to move to the upside. So it automatically teaches you by waiting for that second pinch to not take that first signal. All right, and you're okay to take the second one because the ADX is telling you the bias is to the upside. But we're trying to avoid this one here. We're trying to avoid coming up through here, buying at this level here. Because I can tell you, that was a big green bar. If you were to buy in that area, I bet you'd been stopped out on this tail, somewhere on this tail on the way down. And a lot of people get emotional on those moves where you get a big red bar, you get in and then you get a big red bar and you're like, this is not going to work. And then it looks like it's going to come up and then it gives it back even more. And somewhere in here is where there's a massive emotional threat to your trade. All right, you're looking at it saying you're below the 18. This is over. This is probably breaking down. I don't want to lose anymore. And if it hasn't hit your stop already, you're going to go ahead and take it. Now, I'm just going by experience. It's just kind of the way it works. And it's the whole reason why I've continued to work on entry and triggers. Because if you get better at those, you're 85% of the way there. Because if you get a good entry and you can get to that first target, you're home free. You're a really good trader. You're hitting a first target. You're going to a break even. This is what professionals do. I've seen guys do this on intraday basis. They do the exact same approach. And it really verified what I had been doing for years. But when I saw it, a guy playing on an intraday basis and making a lot of money. So just kind of keep this in mind. The other thing I wanted to point out that it shows a break of the downtrend line. Okay, so that's the 1. All right, and then you have the move to the upside, and then you come down and test. That's the 2. Okay, we want to do that when we have overrun. You see all this overrun? We don't want to play the 1. We don't want to play on a 1. So we're waiting for this to come back to the upside, and then we get the second pinch. So again, it's teaching you how to be a great trader. If you buy at this point, taking out the high of this narrow range bar, you show this to me, all right? If I were to see this and I'd say that was your entry on this 2 time frame pattern, I would say this guy knows what he's doing, all right? You want to do that for 25 trades. See if you can do it for 25 trades. Let me know if you can. Anyway, let me know if you have any questions. Thanks.